Y'all planning for this?
Hello, everyone, and welcome to another episode of the Perfect RIA Podcast. I'm your host, Matthew Jarvis, and on today's episode, we have a former financial advisor, Christine Timms, who ran a very successful financial planning firm and then transitioned from running her own firm to helping other advisors run their firm. So, of course, we're big advocates of the Perfect RIA of do what works, and so love to have fellow advisors turned consultants on the podcast. So, Christine, welcome to the show.
Thank you very much. Thanks for having me. I have to say I was very impressed with your book, The Delivering Massive Value.
Well, thank you.
I listened to it on Audible, and a lot of good tips there. A lot of good scripts and lists, and especially like the client meeting surge. I think that sounds like a really good idea. And that online calendar has got to be very helpful to you and your clients, I think. So, and I guess what I liked the most was, because I'm a big fan of team building, was your emphasis on delegating to your rock star team, as you call it, which I thought was pretty kind of a fun term. So anyways,
thank you for that. Yeah, well, and of course, one of your handbooks is team building for financial advisors. And I feel like I went a little light on that in my book when I talked about, hey, hand these things off to your team members. Then advisors would call back and say, well, what team members? Or how do I get team members? Or when I hand it to them, how do I make sure that gets done? And Christy, I know that's something that you were very passionate about.
Yeah, well, I feel like, I'm pretty sure that my business would have stopped at or plateaued at a level of, well, actually, I should tell you where I am right now, really. At the point when I retired, I'd practiced for about 33 years, and my practice had grown from 0 to 400 million. And actually, I like to think of it sort of as my own firm, but reality is I was working for a big wirehouse, originally Merrill Lynch.
Sure.
And then in Canada, they basically sold us to CIBC, Wood Gundy. So, but my book grew from nothing to 400 million, and in revenue it grew to 3 million in 300 plus households, and that was basically from cold calling and referrals. And I reached the Chairman's Club for the last 23 years of my career. And during that time, I grew my team from sharing one assistant with 3 other advisors to 6 assistants and associates by the time I retired. And actually, probably for the last 10 or so years, I had these 6 assistants. So I think that that's very important. And I think that if I'd only, left it at like one assistant, I probably would have plateaued at about 80 million in assets and maybe 600 grand in production, because you really can only do so much when it's just you. And frankly, it's a lot more fun when you can delegate a lot of stuff to everybody else.
Well, that's an interesting distinction, that it's a lot more fun when you can delegate to everybody else. I think a lot of times as advisors, we can get hung up on delegation is about productivity. It's about just getting rid of things that you don't like. But it's super accurate, though, that if you are delegating the things that are not your highest and best use, it allows you to do more of the things that you're best at, which are typically the things that you most enjoyed. And so if we're looking for a reason to delegate, efficiency is a big part of that. But it really does just make your life a better life to live, which ends up with a better client experience, a more profitable practice, et cetera.
Yeah, I think the clients benefit a lot. It took me a while to get the structure of my team so that it really benefited everybody. I mean, I had clients at one point saying, because I figured out how to add members, but I had clients saying, well, who do I talk to?
Sure.
You've got all these people, and I know I don't need you to get this job done. So who do I talk to? My team basically evolved from just having one person sort of doing admin, and basically what I would call sort of an ad hoc approach. And it grew to me basically, well, first, I guess I should go through the pain of it growing, okay? Because I really got it not quite right for a very long time.
Which actually brings a lot of credibility, right? Because anybody who tells me they got it right out of the gates, I'm thinking, I don't think you actually did this. But yeah, it's 6 people. Because what comes to mind for me, Christine, right away is was that 6 people that were constantly bombarding you with questions, right? 6, do you have a minutes? That's a lot of do you have a minutes?
Yes, and so you need to set it up so that there's a lot of kind of automatic delegation, so that you don't have to think about who to give it to. So when I started out, it was very ad hoc, ad hoc delegation, which means basically no structure at all. So every time I had something I knew I didn't want to do, I had to think about who to give it to, and then I had to tell them how to do it if they didn't already
That's
know.
right.
And so I was spending way too much figuring that out. So then I thought, well, maybe I should have what I would call a specialist sort of structure. So I'd have one person doing the admin, maybe one person doing marketing, another person doing financial planning, another person doing investment research, But then I realized, well, this isn't really working that well because the team members can't back each other up.
Too siloed, yeah.
They can't back each other up effectively, and the whole client relationship was still really resting with me, and so I thought this isn't really doing it. And then of course I ran into that thing about the clients asking me about who they should talk to, and then the clients kind of helped me out here because they started picking a member of my team that they asked for every time, and so I'm going, maybe they're trying to tell me something here. Like they would probably really like, a main contact person in addition to me. And so then what I did is I divided my clientele amongst my three most senior team members, and I called them associates. So then the client really had this main contact person. And so that was a lot better. And then there was an automatic delegation of anything to do with that client. The associate kind of took care of it. But I was always in the meetings, in the main meetings with clients. And the client never felt like I was gone. They just knew that they didn't need to talk to me about most things.
Christine, how did you articulate that to the client? So they come in to meet with you, you've got this associate. Do you say, hey, great news, Sue or Dave or whomever the associate is, they're the person you're going to call when you have questions? I'm just curious how you actually articulate that to the client.
It really just kind of happened. They found the associate was the person that was always calling them. And then when I had a client meeting, it was really obvious because, as we can probably talk about later, I started to include a team member in on my client meetings fairly well before I actually got the associate structure figured out. But then when I did that and I had them in the meetings with me, it became very clear to them that this was kind of their contact person. And I'd actually even say, if I get hit by a bus tomorrow, then lucky you're not going to miss me at all because this person sitting here in the meeting with us is going to be able to, take care of you going forward, which of course set me up very well for when I did retire and my associates did take over from me.
That's a good way to transfer credibility. I mean, we're using a kind of a tongue-in-cheek example, right? If something happened to me, hit by a bus, something graphic, right? But implying that, hey, this person is not just here to take notes, right? This isn't my secretary or something, or just an admin. This person really could continue. So if I wasn't available, then they could do it, which then implies, Christine, to your point of, hey, well, if you have a small question or you really have anything, go ahead and reach out to this person. They are really the next level.
Right. And because I divided my, clientele in three, that meant that, each of those associates had, roughly 100 households, and they would have all the details of that client really clearly in their heads. So it allowed me to, have a pretty good capacity. And I would suggest, that, if people are thinking, well, how can I grow my book and be able to keep track of everything? Well, if you have multiple associates, they keep track of the details. They update you on anything that's crucial, and you can have obviously more households under your control. And one of I guess I would say my main mission behind writing all these books was really to pass on what I learned to help advisors be more efficient, not have to learn, a lot of things the hard way, but also so that they could, increase their capacity because I wanted them to want to take on more clients because honestly, I think people out there need our advice and I'd like to see people get more advice. And so instead of advisors shrinking, their business because they want to offer more services, I want them to be able to offer them more services, but also offer it to more clients. So that's really my overall mission is that, I'm kind of client focused. It's funny that I'm planning on writing another book.
A fourth book, yeah.
Yeah, well, I was going to write a fourth one for advisors, but I think it's more important that I write one for the public first, because I think people need to realize just how important advice is and how vulnerable they are when they take advice from the internet or their buddy next door or whoever's had the latest, hot pick idea or something, So that was really a major reason for why I wanted to write the books.
Yeah, Christine, I like this mindset that you mentioned about being able to serve more clients, right? Sort of the default in the industry, as a default, I'm certainly guilty of myself, is to say, hey, if I'm running out of time, then it must mean that I have too many clients. Though you've certainly demonstrated, wow, I was effectively serving 300 clients of some substantial net worth if you had a 400 million in assets, right? And you were just of the mindset of, hey, what systems can I put in place? If I bring in 3 associates and they have 3 assistants, wow, I could serve a lot more clients. Almost, not to oversimplify, almost kind of the dentist model, right? Where the dentist is seeing far more patients than he or she could on their own, but they've got the hygienist and they have these different layers. But I just want to highlight this mindset aspect of, if you're running out of time, don't assume that it's because you have too many clients. Go with the assumption that you need to find better systems. And that seems like that was your mantra all throughout your career.
Right. And there was a time when I did reduce my clientele, but it was based entirely on sort of suitability, because as I moved more towards like away from stock picking, I mean, I still
Sure.
picked fixed income because I had a very straightforward bond ladder. So I still picked fixed income, but I stopped picking stocks. I went towards mutual funds and separately managed accounts. And when I did that, I mean, there were some clients that were reluctant to do that, right? They wanted to pick stocks, or they wanted to be involved with picking stocks. And so at that point, I did find another advisor for them because it was a suitability issue. And of course, that's the other thing, if you don't have enough time to serve all your clients, it's also possible that you're trying to do too many things, as opposed to doing what you do best, which, might be, the financial planning. I mean, if you're trying to pick stocks and do financial planning, and tax planning and everything, then maybe you're trying to do too much, and maybe you're not even doing as good a job at that as you could do. And you could probably, serve more clients if you aren't trying to do all those things, So one of the things I did, I mean, I guess I should mention it now, because one of the things I did, and it's why I ended up with the second book, is that I realized that, people need to really kind of articulate what it is they are doing. And the process of doing that, it can be in itself, quite the revelation, because you realize that, oh man, I am doing, like way too many things. No wonder I don't have enough time, and no wonder I can't go to this practice management seminar or whatever, because I'm trying to do all these things, and I just can't. So you either hire a specialist to do the things you want to do, which is kind of what managed money is, right? When you're doing mutual funds, and it's kind of that too. But so what I thought was, if I could help people quickly articulate what they do, that would be helpful. So I created this checklist called Business Models Checklist. And it includes a section on identifying just who are your clients, like who are the groups of clients that you deal with, and what are the services that those clients want from you. And then you go through, a whole section on, well, how do I pick investments? And you might find there that you're picking like all these different types of investments. You're all over the map, and you're not focused. You might also, when you go through the financial planning section, thinking, oh, maybe I should be doing more of that estate planning stuff than I'm doing right now. And because, there's all sorts of approaches to financial planning, and some people really just do forecasting, and other people do tax planning, other people do estate planning. It's good to know what it is you do. So I created that, basically it's just an Excel spreadsheet, but it's got a checklist of all these things that you can either tick off or not. So you don't have to write down everything you're doing. You just tick off, are you doing that or not doing that?
Sure.
And I did that both in a Canadian form and an American form.
Oh, cool.
So when you go to the website, you can pick either one. But I thought that was very helpful for analyzing your own business. But also, I mean, if you are getting near the end of the career and you're trying to figure out, well, am I going to find somebody that does all this if I don't have a member of my team to take over? Well, then I can just go through this checklist and see what I do, and ask the prospective successor to do the same.
Oh, interesting. Right. Then you've got kind of a more quantifiable list versus just sort of this generic, oh, I do financial planning. Well, what does that mean? And if you've got a 400-point checklist or whatever the number is, you can say, boy, to me, it means this, but not this.
Well, exactly. And the other thing is, when someone does actually take over, they kind of want to make sure they're doing all the things you used to do, right? And so they need to know what you're doing, what you were doing, so your client doesn't get this surprise. Or you arrive at tax time, and the successor picks up the phone, and the client says, well, hey, you didn't send me this this thing that, my previous guy did. What's, when am I going to get that? And you're going, oh man, I didn't even know that that was happening. And so it's important from that point of view too. And that's actually how I came up with the idea of doing it. Was when I was writing the book for preparing for retirement and positioning yourself as a successor.
Yeah, no, it seems like it's a great checklist to also, if you are on the younger end of the spectrum, right? Let's say you're coming out of college, you're a junior advisor of some sort, you're looking to join a firm. This seems like a pretty reasonable request to be like, hey, would you just take a minute, help me get a better understanding of what you do? Again, because phrases like financial planning or comprehensive financial planning, those are largely empty and meaningless, especially if you're coming out of college, this idea of how it maybe conceptually should work. That would give you a way to say, let's quantify this. What does this really look like in your practice? And then what specifically are you going to want me to do as a junior associate advisor, which eliminates a lot of, again, misunderstanding or assuming, which always gets us all in trouble.
Right. And actually, just the other day, one of the advisors that got the template from me said that he really liked using it to educate the new members of his team, because he's done the articulation of his business model, and so he can just kind of say, hey, this is what we do. This is how we pick the stocks. This is how we pick our money managers. Or we don't do stocks, or we don't do this, and we don't do that, but we do this. And it's a very quick way of showing someone, what it is you actually do. So yeah, it's for all aspects of the career, really.
Interesting. Well, so Christine, it sounds like, obviously you spent a lot of time thinking about this, right? Not just thinking about it, but a lot of time actually doing it in your practice over your career with 6 associates, transitioning out. Now you can, of course, you've transitioned to helping advisors find this out for yourself. So as you think about our listeners, our podcast audience, what are some action items that they could take really this week, kind of wherever they are in their practice evolution? What's something they could take and implement this week?
Well, we didn't talk about it much, but I think it would be a pretty good idea to include somebody in the meeting. And if you have that associate structure, include that person in the meeting. It'll save you a lot of time. It'll give some credibility to them. They will learn. It's a beautiful opportunity for them to learn from you, the advisor, exactly, what's done in the meetings and why all that preparation that's done ahead of time is worth something. So that motivates them and gets them doing a better job and feeling more important. So that's one very quick action. Obviously, they could download buy my books from Amazon on Kindle or paperback.
And of course, you also have a lot of resources available on your website, right? Which is Christine Timms, and the link is in the show notes as well for this. There's a lot of resources, kind of some other podcasts you've been on. Of course, I know you're on my friend Libby Greiwe's podcast, who's a good friend of mine. So quite a few resources available. I would, an action that comes to mind for me relative to your checklist would be for advisors, all of us, to really kind of quantify what is it that my practice does. Again, the more granular you can get, the better. And then who needs to be doing that? Is that something that I, in fact, as the advisor need to do? And that's almost nothing, by the way, that you absolutely need to do. And then who, right? Nearly everything can be delegated. It's just about finding the right people to whom you can delegate it.
Yes, and so we spoke about the business models checklist. I also developed a delegation of duties checklist where I listed many things that you can delegate that are obvious to some, but maybe not to others. And also, you can delegate. You can show on the spreadsheet who you're giving it to. So you can have a numerous number of team members across the top and basically tick off who's doing what. You can even put in how many hours they're doing, and it'll add it up, and so you can see, who's spending their time on what. And sometimes people with a senior team member, can go through that for you. Once again, like you said, you don't have to do much yourself. You can actually get them to go through the checklist for you. So I think it's really important for people to know what everybody else is doing, for you to know what they're doing. And then when you lose a member of a team, which unfortunately does happen, now you got to redelegate those duties, and it's good to know what the other person was doing, so you can basically pick it up and give it to another person, maybe the next person, or maybe you spread it out amongst the people you already have. Easily done. And once again, you don't have to reinvent that wheel. I've done it for you, both, once again, American and Canadian versions. And so hopefully that would make your job a whole lot easier.
Awesome. Well, Christine, thank you so much for being on the show today. And also a special thank you for taking all of the expertise that you learned in your practice and then making those available to advisors. That's, of course, the entire mission of the Perfect RA is to say, hey, we've all learned these lessons and they were hard, painful lessons to learn. And we seem to have done it every wrong way. If you can skip one of these wrong ways and go faster to the right ways, then it's worth all the time that you and I have invested in this. So
right, and we're all so incredibly different, and that's when I wrote the books, I acknowledge that. I don't expect everybody to want to do it the way I did. It really worked for me. And I use myself as an example in the checklist. So when you download, you actually get a sample as well. So you can see, what did work for me. And of course, the books describe, why I made the choices I made as well. But I think it's just really helpful. And I kind of wish there was somebody doing that for me when I was, a rookie 30 some odd years ago.
Yeah, that is definitely one of the times where I feel like I'm aging or dating myself when I say, boy, when I was young, I wish we had these things. But right, it didn't really exist then. So, well, Christine, thank you again for your time. For all of our listeners, thanks so much for joining us. And until next time, happy planning.
Hold on before we go. Something that you need to know. This isn't tax, legal, or investment advice. That isn't our intent. Information designed to change lives. Financial planning can make you thrive. Start today, don't think twice. Be a better husband, father, mother, and wife. The perfect